Above today's session, the calmness has prevailed in the market so far. We are not really seeing any big move happening in the equity as well as in the currency segment. And in today's session, we will take a look on the S&P 500 and the possible levels to watch out for. And in case there is a breakout, I think we can do profit if the momentum picks up in the latter hours of today's trading session. So let's get started for the day. If we look at the data docket for the day, apart from a couple of releases coming in for the European countries, we didn't really get major releases for most of the economies of the world. Even for the US, the data docket is almost blank. So we look at the CPI numbers which we got for the Euro area and for European Union, these inflation rate now stands at almost the highest level of last 1 year, and the concerns surrounding inflation are, you can say, in a way real, and the recent rise in yields is also reflecting that. So to reinforce the same fact, here we have this uptick in the inflation data also, and now for the month of February is a preliminary estimate. The CPI stands at 0.9% in terms of year on year, but the core inflation is even higher at 1.1%. So this will be something the policymakers will have to pay attention to. And then, as I said, for the equity segment, is the sideways market so far. But let's consider some of the technical levels which are going to be crucial moving forward. So let's get started with the technical outlook. First, we will consider the S&P 500, and then we will also see the commodity segment in which the natural gas is the instrument of choice for today's session. Let's start with the S&P 500's technical outlook. This is the daily time frame chart, and the S&P 500 has rebounded sharply after getting close to the 61.8% Fibonacci retracement of its prior rally, starting close to 3,650 and extending above the 3,950. And I feel that looking at these yesterday's gains, the turnaround is in play for the S&P 500, and after this dip, the progression on the higher side is likely to continue. So in today's session, I think S&P 500 might consolidate, but moving forward, even for next couple of sessions, the outlook is now slowly turning on the bullish side. So some of the levels, if we keep in mind, can keep us in good state if there is a breakout. So here, if we consider the pivot point series, the S&P 500 is caught in between these crucial levels. On the lower side, there is the central pivot point, which is going to be the decisive marker for medium-term trajectory of the S&P 500. And as long as it is holding well above it, I think we can be more hopeful on the bullish side rather than on the bearish side. And on the higher side, there is, of course, this first resistance, which is fairly close to the all-time high for the S&P 500, and this is likely to act as the near-term resistance. Also, if we do get the breakout on the higher side, the regression curve has now flattened and inclined on the lower side, but the price action is still unfolding in the upper band. So that gives us some hope for the continuation of this upward momentum in the S&P 500. So in today's session, I'm not really expecting any big move, but there are some key levels I think which we can keep in mind, and the 3,900 price area is one such. We are looking at the possible breakout above the yesterday's high established closer to the 3,910, and I think if in today's session we do get that breakout, then the natural target will work out even above these prior swing high, and I think moving forward we can consider the price zone of around 4,000. It should be within reach for the S&P 500, but for that first we will need the S&P 500 to hold above these 200 SMA in today's session. Then as and when the breakout will happen, then I think we should look for the upward momentum to continue and get involved anywhere above the 3,900 for the bullish trade, for the long trade in the S&P 500. And if everything goes well, then I think eventually even we can expect the 4,000 levels to be reached. And on the lower side, the stop loss can be kept anywhere closer to this 50 SMA zone. So first thing first, we will need the S&P 500 to hold above this 200 SMA for the major part of this session, that is the US session. And then I'm advising to look for the buying opportunity on the rise, not on the dip. So if we get the fresh breakout on the upper side of 3,900, then only we should look for the buying opportunity. And then if the continuation of the bullish trajectory takes place, we can expect these prior swing highs to be taken out and new all-time highs can be expected in coming days. Now moving to the natural gas. This is the natural gas charting on the daily time frame chart, and here the natural gas has been holding closer to the 2.7 level for the last couple of sessions, and on the lower side it has found some buying momentum after this steep decline starting close to 3.3 and extending all the way to 2.7. So that was the decline of almost 20 percentage point from the higher side. But if we consider the price action over last couple of months, then you can observe that the current consolidation is happening closer to these prior swing highs, and we can expect this price area to act as the near-term support, and that's what we are observing for last couple of sessions also. So I think unless and until there is fresh break on the lower side, we can look for some buying opportunities in the natural gas in the scalping trade trades, not from the perspective of big swing trades, but more of scalping opportunities. And for that, we can expect the retracement to take the natural gas at least closer to this central pivot point, which is there around 2.9. In today's session, also we are seeing some buying momentum after this consolidation in a very tight range, just little above 2.75, and now the natural gas has even crossed about 2.8, and I think that's a welcome development if we are looking for buying trades in today's session, as we have this breakout above the 2.8. I think anywhere closer to 2.8 we can look for the buy trade, and on the higher side the price area of this central pivot point can be expected. If you consider the regression curve as well as this pivot point formation, both are not exactly conducive for the buy trade. These are still bearish, and I think as I have said, I am not really looking for big swing trades here. So we are trading against the trend, but given the backdrop of daily time frame formation and this continued decline and then consolidation, I think we have seen the natural gas form bottom closer to this 2.7, and on back of that we can indeed look for some bounce from the current levels. And for us to define some price area, I think this confluence zone of 50 and 100 comes handy. So as long as price action is holding well above this confluence zone of 2 SMS, I think we can be hopeful of the retracement, and we can look for buying trades on the rise. So buy on rise is the mantra for natural gas as well, and then the near term targets can be kept closer to this 200 SMA. So if the price action holds above this price swing high, anywhere above 2.8 price area, we can look for the buy trade while keeping the stop loss anywhere closer to this prior swing low, which is there around 2.75. So we will have to take the risk of around 50 points here, and on the higher side the 100 points gains can be expected, getting us the risk reward ratio of 1:2. So that's it from my side for today's session. If you have any idea or any query to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Do subscribe to the Discoscopy webinar channel to stay updated on the market developments. Goodbye.